We're right up against the Fed decision this afternoon, and markets are basically holding their breath. I'm Grant Mercer, and this is Storm Stock Solutions. The tape is tight, volumes are picking up, and the next hour is all about what the Fed says and how the bond market reacts. Since our last update, the macro picture has sharpened. According to reporting from MarketWatch, history says December Fed days usually deliver a modest gain for the S&P 500. But as Christine Idzelis and Gordon Gottsegan point out, Powell's final meeting of 2025 could break that pattern. The wildcards. How many cuts the Fed signals for 2026, how forcefully Powell talks about inflation risks, and how the market handicaps life after Powell, with the next Fed chair still unconfirmed. Adding another twist, MarketWatch's Womanathan notes mortgage rates are actually surging heading into this expected rate cut. That disconnect, short-term policy easing while longer-term borrowing costs climb, is exactly the kind of thing that can spook housing and rate-sensitive sectors. Traders will be watching home builders, rates, and consumer lenders to see if they start to reprice the idea that the Fed may not have as much control over the long end as it used to. On the strength side, there are some big movers and themes standing out. Claudia S. highlights Carvana, whose stock is on its longest winning streak on record, up nearly 50% over 12 sessions, with potential S&P 500 inclusion dangling out there as an added catalyst. That's the kind of momentum name that tells you risk appetite is still alive and well. Pros will be asking whether this is sustainable improvement in fundamentals or a sentiment-driven chase that could reverse quickly if liquidity tightens after the Fed. In tech, enthusiasm around AI infrastructure remains intense. Brittany Nguyen's piece on Broadcom underscores that Wall Street is calling the name a top pick heading into Thursday's earnings, largely on custom AI chips. That optimism is exactly why some traders are handling it with care right now. High expectations, high valuation, and a macro backdrop that could change the discount rate in an instant if Powell sounds more hawkish than hope. And speaking of AI, Christine G. at MarketWatch points to another momentum story. Google's Gemini reportedly growing user counts 6 times faster than ChatGPT, even though ChatGPT still leads in absolute size. That keeps the focus on mega-cap tech as the core beneficiary of the AI spend cycle. Into and after the Fed, investors will be watching whether higher yields pressure these long-duration growth stories, or whether AI excitement continues to overpower the macro headwinds. In the background, there are some under-the-radar personal finance stories that echo the caution we're seeing in markets. Quentin Fottrell's latest columns, one on whether to claim Social Security at 67 or 70 when income is dropping, another on family pressure to fund an 81 Schwergold's bucket list trip, speak to households trying to stretch finite resources in an uncertain rate and inflation environment. That same mentality, maximize flexibility, avoid irreversible mistakes, is very much how pros tend to approach positioning on days like this. Looking into the next hour, everything turns on the Fed statement and Powell's press conference. How many cuts they pencil in, what they say about growth risks, and whether the bond and mortgage markets keep sending those something's off signals. I'll also be watching Carvana and the AI complex, Broadcom, Google, and peers, to see if momentum holds or fades once we have clearer policy language. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.